Hello and welcome to the Wendell Effect. This is Brandon Wendell reminding you that we are not broker-dealers or investment advisors. Can take a look at this information today from an educational standpoint. I'm telling you to buy, sell, or holding particular securities, given personalized recommendations. Past performance is no indication of future results, and there's always risk in the markets. We can try to minimize the risk, but we can never eliminate it, and we're not subject to trading restrictions, so we can have position in a security and initiate one at a time. Make sure you stay in touch with me. I've actually got some requests I'm going to be fulfilling today as well, but also you can email me at brandonwendell.cmt@gmail.com if you got some future requests you'd like to see on the shows coming up, or any guests you'd like me to contact and try to get on here as well. You can also hit me up on Twitter. I tweet pretty much every day about the markets at TraderBdub, and you can search for me on YouTube, obviously, for the Wendell Effect, and I'd appreciate it if you could go ahead and hit subscribe and like for the videos. That way you'll be notified as well when we get the new videos posted every week. So we're going to change the schedule up just a little bit here. As I said, there's been some requests, and we're going to continue with the equity index futures, moving into energy futures, but then we're going to go in a quick sector watch before jumping into ETF analysis for some of the major ETFs that people have been asking about. So starting off for the week of February 26th, here's the equity market analysis for the futures. Typically, this is not a good time for the S&P 500. You can see that really it's been mostly a couple years for the return, but overall, there's more red than there's been green between February 26th and March 8th. Almost 70% of the time, a little under, about 67% of the time, it's been bearish. So don't expect much more than maybe continuing the sell-off. We started seeing that last week. You see that big red candle that picked up. We never got into bullish territory. You could see with the momentum, we also never got above or into the supply zone. So we're still in a bit of an uptrend with higher lows and higher highs, but definitely weakening and threatening to snap that uptrend. Obviously, we have to break 3,800 before the uptrend's officially over, or make lower highs than lower lows. Going down to the daily chart, though, you can see we're much closer where we have broken the trend line that was trying to form. Really, we just had our on Thursday, we had the third touch of the trend line to make it official, but then on Friday, we closed below it. So we open up, we're probably going to go below 40 here on the RSI and continue to move down, as we're no longer probably retracing this move, but are actually starting a new downtrend, at least on the daily charts here, with lower highs and lower lows. On the 4-hour, we do have a demand zone I've been watching at 39.27 to 3,900. Again, we need to break 3,800 for the actual new lows we put in on the weekly chart, but on the short term, we're still very bearish. I expect a little bit of a bounce here, maybe Monday or Tuesday, another small retracement before we head lower. NASDAQ doesn't fare much better. Again, it's thrown off by a couple of extreme measurements on the 2020 and 2009. So I'm not really worried too much about the average return, but overall, 60% of the time for the last 15 years, we've been bearish. So looking at the chart of the NASDAQ, it looks pretty much the same, where we've made higher highs and higher lows on the weekly, but didn't get into bullish territory, started to find some weakness already. In the daily, pretty much same thing. We kind of snapped that trend line that had been formed. We actually did it earlier in the week, but now we've surpassed the 38% retracement. We are not, I guess we are in a bit of a downtrend with lower high, lower low. We haven't gone into bearish territory for momentum below 40. However, on Thursday, we did make a high that was below 60, so that's definitely bearish. And it looks like we got more bearish pressure to come. And on the 4-hour time frame, our 4-hour demand is much, much lower. So we got lots of room to go down at the 11,500 area before we start to see any kind of significant bounce. We may get a small bounce on Monday, as we're not getting as much bearish momentum as we had before. So a small divergence, but it's not going to mean much except for setting up for some new shorts. Dow, pretty much same picture. Again, 60% of the time, the last 15 years, this period between now and the 8th of March has been somewhat bearish. Well, we saw that consolidation on the weekly chart. We finally broke and closed below it, which I thought it would. It was going to continue to move to the downside. And we just see a lot of weakness here. We can't get into bullish territory. We were just sideways, but now we're getting a lot more bearishness. And you see it here on the daily as well. We made a couple highs that could not get above 60. We've moved below 40. Looks like we're going to be seeking out that 31,000 area of demand. Oops. Sorry, on the 4-hour, we might get a little bounce, though. In the meantime, again, we got a divergence where prices move down. The momentum isn't as bearish, so it could lead to a little bit of a bounce before we continue to move down towards our next projection 32,211. We did a bounce just beyond each of these projections, so we may pierce this before we bounce again. And finally, the Russell is no longer going to be able to continue to climb. It did a duplication basically of the previous impulse and now retraced 50%. It barely got positive before it turned around. So there was a little more bullishness here than there were in the other markets. Although altogether, this is still looking pretty bearish. We've retraced 50%. Not into bearish territory, but definitely a bearish trend. Lower highs, lower lows, looking to continue. There's really no demand until here, just under 1800, really. On the 4-hour chart, suggesting a small bounce to start the week with that positive divergence before we continue to go down. Expect some pauses about 1850 and 1800 along the way. Moving on to the energy sector, we'll take a look at that for the 26th of February. And you can see that on crude oil, it's been kind of 50-50. We've had some good years, we've had some bad years. The bad years have been kind of mild, but the good years have been pretty bullish. So looking at the weekly chart, we're just sideways right now. We may end up getting a bullish week because we're getting close to the bottom of that sideways range we've been in for a little while here. Looking at the daily chart, you can kind of see what I'm talking about, where we're near the bottom of that overall range between 73 and 83. And therefore might get a little bit of a bounce this week. It's not going to be a whole lot. I don't know if we're going to be able to get a new high. We'll probably stall out most likely right around 79, it looks like, because we are starting that move from below 40, which means we're starting with lots of bearish momentum rather than bullish. So we're currently in a retracement of that downward impulse. We paused briefly at 38%. I think the next pause is going to be just above the 61.8 at this area of supply. Probably about, 78.50 before we start heading back down again. That looks like it might be a decent shorting opportunity coming up this week. Moving on in natgas, this is also somewhat bearish. Last year was bullish, but overall more bearish than bulls in the last 15 years. Looking at our chart, we've been just sinking, but notice the alternating red and green recently and lack of momentum is telling us that we might be flattening out in our downward trend. We may actually get a little bit of a bounce going on soon. On the daily chart, we did get that bounce. The problem is we ran right into the origin of the breakdown that we had. So if we can close above this 2693, we might actually be able to rally quite a bit. But it doesn't look like that's going to happen. Instead, it looks like we might go sideways before we start selling off yet again. Same thing on the 4-hour chart. This is not really a great supply zone. We spent a lot of time in this area, but if we get a shot above 2.8 here, there is a supply zone that we need to contend with before we can go higher. If we go into that area with some sort of weakness, maybe a negative divergence on the indicator, that would tell me that that's a shorting opportunity for an entry, targeting 2.163 and then ultimately continuing down. Well, I don't actually have a target, so you would just hold on until the trend breaks again. Looking at unleaded gasoline, 40% of times moved up. Again, kind of overwhelmingly bearish for the last 15 years. And looking at the weekly chart, we're getting that kind of lower highs. We haven't made a lower low yet, but it looks as though we're trying to impulse down. We did bounce at the first projection. It looks like we could go down to 2 over the next several weeks. And, it'll take a while, probably about 6 months or so. Anyway, looking at the daily chart, still been watching this head and shoulders formation that's been trying to form. You got the left shoulder, head, right shoulder. Haven't broken the neckline yet, so we got to wait for that. And you can see, whoops, this was the 4-hour chart. I had this zone that I called out for the supply at 26609 last week. It actually did hit. So hopefully you were able to take advantage of that sell-off, and you can see that the RSI confirmed it. We could not get into bullish territory above 60, so we sold off, bounced off demand. We have a bit of a divergence where prices made lower lows, but the indicator's making higher lows, leaning to this bounce, but I don't see us getting much more movement to the upside out of this. Instead, I see us continuing lower this week. And finally, for the energies, heating oil also looking somewhat sideways right here with alternating red and green and lack of momentum right now. Take a look at the heating oil daily chart. And again, just a bit sideways, but we are in a bit of a bearish move, possibly getting ready to push down to 2.51 this week. That would be my next projection target on the downside. As far as entries, well, we've been testing this supply multiple times, so it may not be good. although there's an area just above it with a drop-based drop that might suffice for new supply right around 2.8 to 2.83, perhaps, on the upside. Just got to check to see what that is. So there may be something just above where we are currently. Now, moving along to stock market analysis, we're going to take a look at the sector performance overall. And I said I was going to take a look at some individual ETFs that were requested, and then some hot stocks we've been doing already and following up on some of the previous ones. And that's it for the week of February 26th. So for the last 6 months, you can see that we've been having the sectors that usually mark off a peak in the market that have been leading us, except for financials. That's been the unusual one. But typically, materials and energy, when those guys are leading, that is typically a peak in the market and kind of leads to a bit of a sell-off, which is what we've been seeing. In the last month, I believe this is, last month, we kind of rotated a little bit. We started having discretionary and technology, and that's usually what you see when the markets are getting ready to run to the upside. It's the beginning of a bull market, but this may be a little bit of a false rally before we start dropping again. So taking a look at the year-to-date performance for the markets, we see a lot of weakness in health technology and the consumer staples, which those are the safe havens. Basically, we've been experiencing a bit of a bullish rally trying to get off the lows. People are expecting the economy to improve. However, some of the numbers have been recently out and showing the opposite happening. So we're going to see that the trends, as I mentioned earlier in the equity market, futures probably getting ready to turn to the downside. So talking about ETFs and things we could do there, again, I got some requests. I'm going to be doing this now. Looking at the weekly chart of the spiders, you can see that we did move up, as I was mentioning, but are now starting to rotate over back down. And we couldn't get into bullish territory. We made it to the first Fibonacci projection based on the previous impulse, but couldn't get into bullish territory. So the big number will be right here. If we break that low right around 375. If we break that low, then we're changing the trend direction for sure. Looking at the daily chart, we've had a pretty deep retracement of over 50%. We tried to save it a little bit on Friday after the gap down, but couldn't really go much further than the prior low. So this is showing a lot of weakness. The key will be if we start getting selling pressure on Monday, if the RSI, the daily RSI, goes below 40, then we will end up probably breaking down and closing towards I would say 384 by the end of the week. Looking at the Qs, this was a weaker retracement, but we did violate the 38.2%. You can see we ended up opening and closing below that on Friday. So definitely seeing a lot more weakness there than we should if the markets are going to hold up. So the NASDAQ is definitely showing some cracks. Again, watch to see if that RSI dips below 40 on the daily. Now, another request was for TQQQ. I do want to put out a little bit of a warning here. Anytime you see ultra or 2 or 3 times, you got to be careful with those securities because they reset that percentage every day. This is set up to move about, I think, twice, or I can't remember if it's 2 or 3 times the amount that the underlying Qs typically move in the same direction. So you just got to be careful because they're really designed to be more of a day trading vehicle, and some people misuse them as investments, thinking they're going to get better returns. It's not always going to work that way. It can go more against you. As you can see here, the Qs only pulled back 38.2% of the previous impulse. Meanwhile, the TSQ pulled back 50%. So there's a bigger drop as it pulled back because you're getting a higher percentage drop from a higher number. Anyway, you can see this is pretty much on the same trajectory as the Qs. Once again, we got to watch to see if we end up getting a close on the daily chart below 40, expect more movement to the downside and probably testing 1853 by the end of the week if that happens. Looking at the diamonds, this is also not as weak as the S&P was. You can see we're struggling right now to hold the prior lows. We haven't made it to 38% retracement, but it looks like we've got lots of weakness. This did get below 40. And therefore, even though it didn't look very weak, it may end up continuing to collapse and kind of hinting at what some of the other markets might be doing this week as well. And finally, the Russell 2000 is still retreating. As you can see, it didn't make the 50% retracement, but before it dropped, it tried to make a last-ditch effort to go up and couldn't get into bullish territory. So that's extremely bearish. We do have lower highs, lower lows in a downtrend, and nothing really to hold us up. So I would not be surprised to see this continue to slide and maybe even lead us down. Anyway, looking back at some of the trade ideas we had in the past, CME Group, this was one that we were looking at for a long from the 19th of February to March 4th. Unfortunately, I don't think it's given us an entry yet. I was waiting for it to pull back to one of the Fibonacci retracements, and you can see that it is trying to, but it's not pulling back very well. We're still in that bullish mode, so we should continue to look for buying opportunities at either one of the Fibonacci retracements if we see a good bounce there, or at an intraday demand zone. EVRG was a pick that we were also looking at on the bearish side. Unfortunately, never got up into our entry. Earnings came out with a big gap down before it rallied up. This one's dead for me. I'm not going to go ahead and trade that anymore because we've already hit our targets before hitting the entry. Usually it won't work out. Yum Brands, actually, we're talking about that. We said that last week we had some issues here. We couldn't make it up above the 60, that we may need to bail out of that. It wasn't likely to reach the target. Sure enough, it did pull back. We are below 40 at this point. This demand will not withstand another test here. We're likely to break down. So make sure you're out of Yum Brands if you went long. CF, on the other hand, did work out pretty well as we started moving down. However, when we bounced here at these lows, you notice we didn't get below 40. Well, we are okay so far as long as we don't break this high. The stop loss, if you're in this right now, needs to be moved just above this high from Thursday of last week. And, you can see that we didn't really rally very far, and we're starting to roll over a little bit. But right now, you can keep your stop loss just above the high from Thursday. If that breaks, you need to be out because, again, we didn't have enough bearish momentum to really continue to move down. So if we break a high, we're likely to keep going up and retesting this supply zone again. So make sure you got your stop loss. What is that, right about 87, perhaps, maybe about 86.70. Looking at SNPS, unfortunately overshot the entry, as you can see, and stopped you out if you try to get in. It did bounce, but it's not going very bullish right now. You can see we're not getting to bullish territory. It's likely to collapse, maybe even test that lower zone. At this point, I'm not interested in it anymore. We also have Schlumberger. That was a good trade. As you can see, it went in, made you a little bit nervous here, and that's because, again, it went above 60 on the RSI. When we dropped, we had to make a pullback, did not get above 60, and made it to target 1. So this is going to get a little bit of a pullback right now. We may get another entry and using this 56 area as a new entry if it gets that high. If not, obviously you just got your trail stop in place. It should be able to make it to target 2 hopefully by next week. Maybe not. It might take a little bit longer, but should continue to slide for us. And Republic Services, RSG, I think this is a new one for this week. Yeah, 26 February to March 4th, 90% of the time for the last 10 years, this has been pretty bullish with almost 2% return. So right now on this 4-hour chart, waiting for a pullback to the area of demand here, 124.45, 126.04, with the stop loss below, targeting that gap fill and then a supply zone above. So keep an eye out for this one. It looks like it should be pretty bullish. Hopefully it gives us the pullback first before it rallies. Anyway, that's what I got for you this week. Again, if you got any questions, feel free to email me at brandonwendell.cmt@gmail.com. Hit me up on Twitter at TraderBdub, and please hit like and subscribe. Helps me out a lot, and that way you'll also be notified when new videos are coming out. Until next time, trade safe, trade well. Take care, everybody.